course, through election night. It was good having you. So what do you make now? You've had a chance to digest a little bit of what's happened. Yesterday was, felt euphoric. Now what?
Well, yeah, first of all, Scott, thank you for having me on election night. It was historic, and I really enjoyed it. The move yesterday, 3%, the best move in the history of any post-election rally, I think needs to be respected because it really highlights one of two things or both. One is that there was so much de-risking into that election. Actually, it was unusual. We actually fell 2 weeks into election day. That happens like about a third of the time. And the second is that animal spirits could be unleashed because of the interest and belief that there's deregulation and mergers and a pro-business environment. So I think it's a very respectable move, and I think it sort of argues we have 5 to 10% upside into year end.
At what point, though, do you get on board with Barry Bannister's idea that the train could be leaving the station heading, full speed to Crazy Town?
Well, he's sort of structurally correct that, this market top is not going to be because of someone's going to have a problem with PE or because a recession's going to happen. I think it's very likely, in the next 6 months, the top is because either firepower is exhausted or expectations have become unhinged on markets. We can measure either, right, we can look at margin debt. That's just been flat for the last 4 months. So the market's been up, and most investors have been de-risking. That's fuel for me, upside fuel. And when you look at sentiment readings, it's not extreme. In fact, the VIX was elevated and only normalized yesterday. So I don't think sentiment's extreme.
Gosh, I was just going to ask you about the VIX. It's funny you went there. I'm staring right at it. I mean, it's down 30% on the week, at just a full-blown collapse, right? Don't forget, we were above 20. I think we were at 22 at one point last week. We're barely above 15.
Yeah, it was actually very interesting to look at the VIX futures curve. But on election day, the VIX futures curve was over 20 all the way through August of next year. It should be around 15, 16. The markets were pricing in tumult and uncertainty for like 9 months, 10 months. So I think there's a huge amount of re-risking taking place. I don't think people got their exposure yesterday and today.
I mean, look, you I know, thought that we wouldn't know the outcome of the election for many weeks. I think that was your base case coming in. So I think there's a lot of surprise, rethink, as we look at where this market might be able to go. On that note, you do have a new ETF, which I want to talk about. It's called the Fundstrat Granny Shots U.S. Large Cap ETF. Granny Shots being that you think these would be a little bit easier to make, right?
Yes, that's right.
How'd you build it? We're talking about names. I hope we show this. I think we have produced this up. Tesla, Goldman, JPM, Johnson Controls, Caterpillar, Emerson, TransDigm, Eaton, Oracle, Ingersoll. That's the top 10. But how'd you build that?
The Granny Shots ETF is really built upon the research model we used at Fundstrat. That was a thematic core stock portfolio that we had been using since 2019, so for 6 consecutive years. It takes 7 what we consider relevant market themes, and it finds the most correlated stocks to those themes, whether it's AI or millennials or Fed easing or improving PMIs. And then the stocks that appear in the most frequently across themes are our Granny Shots. And Granny Shots is named after Hall of Famer Rick Barry's way of shooting free throws.
Some of us do remember that. We definitely do. Tesla's the #1 stock. The weighting is 3.25%. You want to just talk about the move in that stock this week and what it means to you in context of how you've built this and where you think it can go?
Yes, Tesla has, in our research product, had been appearing since inception, since 2019, because that company has a hidden asset, which is its AI and intellectual property. And now, of course, the intellectual property built around all this infrastructure they own. So it's a company that, to us, looks undervalued because people look at it as a car maker and look at current margins and earnings. But as we know, there's a lot of new initiatives, whether it's robotaxi and robots, and now, of course, there is a political angle that you guys well discussed, and I think it can only help Tesla.
Tom, be well. We'll talk to you soon. Appreciate you. It's
Thank
Tom
you.
Lee, Fundstrat. Chart of the day is next. The best performing stock in the S&P this